Is there a risk in long positions? If you're interested in knowing more about this, please keep watching. Let's directly look at the Bitcoin chart. Personally, my main concern on the daily time frame is the EMA ribbon. If we are still in a bullish trend on the daily time frame, I would only consider going long, and would never consider going short. As long as the daily time frame indicates a bullish trend, my only considerations are going long, or not entering a position at all. It is absolutely impossible for me to consider going short while the daily time frame is still in a bullish trend. Let's take a look at what level on the daily time frame could lead to a potential reversal. It is actually the lowest edge of the EMA ribbon, which corresponds to the longest period exponential moving average, with a deduction price level of around $28,500. This is approximately the same entry price as my long position. Yeah. Of course, I still hold my previous Bitcoin long position that I opened at around $28,500. Currently, you can see that the current price is still about $2,000 away from the mentioned $28,500 level. If the candle sticks really close below this level, I would consider the bullish outlook to be very unfavorable. Moreover, if we pull back the chart to the previous S/R reversal level, it aligns with the area of $28,500. If we experience a rapid breakout of previous resistance with significant volume, followed by an immediate return, it would be a very bearish signal. Therefore, I believe that the bottom line for the bullish trend is roughly around $28,500. Of course, some traders might have positioned themselves before or at the trendline breakout, maybe around this area, so their entry price would be around $27,000, or even below, which is not surprising. In fact, they still have a certain margin of safety. If we truly hope that it develops into a bullish wave, and we fully capture the entire trend, I believe that $28,500 is the level we should pay the most attention to. Currently, it's evident that it hasn't reached that level yet, although we came very close to the previous low yesterday. I have been observing the market closely. Let's switch to a smaller time frame chart. If we zoom into a smaller time frame, we can clearly see that the current price action of Bitcoin has little impact on the overall trend. It is simply oscillating within a box pattern. The upper and lower boundaries of this range have been clearly defined. You can see that in the mentioned areas, the price hit almost the exact same levels. After the touch, it dropped down, and in the lower areas, we experienced a rebound. You can observe this pattern of alternating highs and lows several times. In such oscillating ranges, it is generally advisable to avoid trading. Since there is no clear trend, it is important to follow the existing trend, unless it is proven to have changed. Currently, the situation indicates that the market is still within the oscillation phase, unless we see a candlestick completely closing outside of this box in the future. If it closes above the box, I would consider the next trend to be bullish. However, if it closes below the range, I would expect the correction to go further. We will need to observe further to determine if this will mark a trend reversal. But at the very least, we should examine and possibly exit long positions. For those who have added to their long positions at higher levels, when the price breaks below this box pattern, it may be a suitable time to exit. I reckon this is the most prudent approach. Looking at the 4-hour time frame, we can see that there was a clear divergence pattern in the past. At a previous point, due to a rapid and significant increase in price, with high volume, the divergence was quite pronounced. However, as we move forward, the divergence gradually diminished. At this current point, we have indeed observed a divergence. After a divergence, what we need is a correction, and a golden cross below the baseline is necessary for the correction. It seems that we now have an opportunity for a golden cross below the baseline. At this point, if the MACD and signal line cross upward and move through each other in the upcoming price action, it could indicate the end of this correction. Furthermore, in order to eliminate any potential bearish divergence, the upcoming trend will need at least 2 more upward moves. Therefore, I believe that if the divergence is repaired at this point, and a golden crossover occurs, there is a high chance of a significant bullish move in the future. However, we need to wait for the price correction. Currently, the situation indicates that it is finding support at the expected level and has not directly broken below this range. I believe this is a blessing in disguise. Okay, let's take another look. The price action yesterday was indeed quite dramatic. After a sharp upward spike, it quickly reversed and formed a long lower shadow. While moving downwards, the downward movement was relatively continuous. If we measure from peak to peak, it was approximately a $2,000 distance, which is significant. Now, let's switch to the 1-hour time frame. If we do that, we'll notice that the volume during yesterday's downtrend, in my opinion, was insufficient. If we consider it a sign of stronger bearish sentiment. Why is that so? Let me explain. As you can see, the volume during the preceding candlesticks was at this level, just like that. However, during the current bullish candlesticks, the volume appears to be more robust. Now, take a look at the bottommost candlestick. It has the highest volume, but it also has the longest lower shadow. This lower shadow extends far beyond the body of the candlestick. So, I believe it's incorrect to say that this candlestick indicates stronger bearish sentiment because of the exceptionally long lower shadow. Therefore, even though the downtrend yesterday was relatively continuous and rapid, if we zoom out to a larger time frame, you'll notice that the volume supporting the bearish sentiment is clearly insufficient compared to the bullish sentiment. Now, let's assess Ethereum. I have already exited my long position in Ethereum, since it has dropped below the support level we discussed yesterday. This support level was initially a resistance level, but it eventually turned into support. However, after a brief rebound, it quickly broke below, particularly when it broke below the previous low. This level, that was the best exit opportunity. It was around $1,895, and that's where I exited. After exiting, it initiated another rapid downward move. During yesterday's downtrend, Ethereum was relatively weaker. So if you have watched our previous videos, you may have noticed that if you have a larger position in Bitcoin, or at least a significant exposure to Bitcoin, your losses would be smaller during this downturn. Let's take another look at the ETH/BTC exchange rate that we discussed earlier. You'll notice a head and shoulders pattern in the past. After the price breaks below this pattern, you can see it continue to decline further. This decline illustrates why the long positions in Bitcoin were relatively heavier, and why we decided to exit our Ethereum long positions. It is quite clear. If you'd held long positions in Ethereum during yesterday's downtrend, you would have experienced a loss of approximately 2%, which is not insignificant, especially when considering leverage. Alright, thank you. You're welcome to like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. By the way, as you can see, I have shared my official Line account across all my social media platforms. All future resources, including the info for YouTuber Cryptos members and various social resources, can be found on the official Line account. Since my main audience is primarily from Taiwan, where Line is widely used. So, if you prefer using Line and are not accustomed to Discord or other social media platforms, you can join my official Line account, where you'll find one-on-one customer support and access to all community resources. Thank you very much. Bye-bye.